In a startup, yes, you can look at the Form C. All startups have to file this with the SEC if they're doing a Regulation CF equity crowdfunding. You look at the pitch deck. You want to understand these core 6 things. You want to fundamentally understand the problem that this startup is trying to solve. Again, you can't look at entirely just the financials. You have to look at things like, what is the problem they're trying to solve? Is there competition? Are there other products in the market that are trying to solve this? How is this problem currently being addressed? And what is the solution by this company? And how are they positioned to solve this problem in an innovative and creative way? What is the market size of this problem? What is the total addressable number of people or businesses that can actually benefit by this problem being solved? And what is the dollar amount, and how fast is this market growing? Is it a market that's shrinking, or is it something that could be 10 times the size over the course of the next few decades? You want to look at the traction that the business has. And the earlier the stage of the business, the more difficult this specific element is, because there's a lot less traction. This isn't a publicly traded company where you can just look at the last 10 years of operating history. You want to look at the finances. You want to look at, what does the cap table look like? Who are the prior investors in the company? And would you be investing alongside these investors? And then you want to look at the team. The team might be the most important thing to look at the earlier stage of the company, because there is no traction. So you're betting on the team to make sure that they can execute on this problem. And you want to make sure that you have good team market fit. We talk about product market fit, and an established company has already figured out the business model. They already have some kind of product market fit. You can't have product market fit unless you have founder, team, product. You can't have product market fit until you have team market fit. So making sure you have the right team for the job, make sure you have the right entrepreneurial insight to evaluate this company, and really use your gut feeling here. This is where looking at the fundamentals of a publicly traded company will win. That is the best investors. They don't invest on emotion. Similarly, you don't want to invest entirely on the fundamentals in this case, but you want to use that little bit of gut feeling. You have to really believe in the entrepreneur and the team, and you have to have some kind of entrepreneurial insight as to why this company is going to win. Most startups fail. Most startups return 0 for the investor. So why is this company going to be any different? Again, this is not a publicly traded company where at the very worst the company it could go bankrupt, but more likely than not, the stock will just become devalued over time and you'll end up losing a little bit of money. In a startup, the risk is very high, the reward is huge, but you have to figure out some reason why you feel convicted in investing in this specific company. Hopefully, it's an industry that you understand and you can bring something to the table more so than just the average person looking at this specific company.